That's fine. Thank you very much. Well, again, Simon, let me thank you for giving me the opportunity to show on our webinar here to your attendees my price action methodology in conjunction with my STB Trend Trader software. I know I did note, Simon, you said it will not be a full webinar. Well, we'll try and cover as much as possible. I know we're on time constraints, so everyone, please forgive me if you find me rushing over something. And as Simon rightly says, at the end of the webinar, there will be hopefully time for some questions. A very condensed disclaimer: please remember, trading the financial markets involves substantial risk and may not be suitable for all investors. And if you hear of me during my presentation talking about buy and sell signals, please do not construe them as being giving advice. It's for educational purposes only. And as you know, before entering into any financial trades, proper financial advice should be obtained from a qualified financial advisor. So just getting that out of the way, the aim, I think, of all traders is to be successful. That is the reason that we enter into the trading game. We want to make, whether it be extra money, whether it want to eventually be a full-time income, etc., etc. And hopefully in this presentation, I'm going to show you how you can achieve this using my price action trading methodology and my personally developed software trading tool. But let me begin by telling you a little bit about myself. I started out in business at a very young age. In fact, I was in my late teens, and that was basically because my dad died at a very young age, 42 years of age, with a heart attack one day. I have one younger brother, and I was the eldest, and my dad was in business. And I had just started college, and I actually left college to go into the family business. So that is why I started at such a young age. And I'm not saying we're not ambitious at any age, because I still think I'm ambitious today, and a little bit, 1 or 2 years older, say. But I think certainly when you're young, you're more ambitious. Well, I was anyway. I was very ambitious, and I was always very keen to make money. And to make money quickly. Now, you know, how was I going to make money quickly? And you know, you look at this and you look at that, and you're not too sure. You're not content with what you're doing, although we were in the family business. But I'd heard so much about people having success in trading and investing in the financial markets, the stock market. It had always intrigued myself, so it did. And you know, it was one way of which I knew that there could be money made if you knew what you were doing. I got involved in a conversation one day with a business associate, rather, from our local village in Northern Ireland, and he happened to be telling me about success he had with a share within the previous couple of months, and it would happen to be a penny share. And I happened to say to him in passing, I said, look, if that opportunity or another opportunity arises, perhaps you'd kindly let me know. Again, folk, let me stress, I hadn't a clue, right? I was listening, and I'm sure you can relate to this yourselves. So much of this going on, reading the papers, blah, 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 listening to other people's opinions, etc., and making a decision based on that. But anyway, he did come into my office sometime later and said, I believe there's an opportunity in the same share. It was a share called Rotaprint. I don't know whether any of you can remember it. And I bought the share, and that happened to be a Monday. And between the Monday and the Wednesday, the share had made me £2,000 when I came out of it. So that enabled me to catch the trading bug, or the investing bug, so to speak. And I had some decent success off and on. But lo and behold, if I didn't get caught in the 1987 stock market crash, it didn't really quell my determination to make money in the financial markets. And I had obviously started to read quite a bit and learn a little bit about trading derivatives, and I couldn't wait to begin. But I honestly hadn't a clue, just as I hadn't a clue in relation to purchasing the shares that I'd been doing the previous number of years, probably. And unfortunately, this not having a clue meant that I made a lot of costly mistakes. I tried to self-teach myself, and it was a bit of a disaster also, because again, I was probably trying to self-teach myself and at the same time tried to trade. Now, how did I change my fortunes? Well, I was luckily enough introduced to a mentor, and I think it's so important in life that we have people to look up to in any aspect of our life, and certainly whether you're, I'm sure you can relate to your own career throughout it, whether it's only beginning or whether it's in the middle of it or coming towards the end of it. There was somebody at some stage that you probably looked up to. And certainly no more so in trading. It's very important to have someone with whom you can ask questions, someone with whom you can learn from. The person that I was introduced to had developed many trading systems for large institutions, and it was all based on price action. Now, once I began trading using price action, I immediately began to see a positive difference in my trading results. And the reason was quite simple. It was because I now had a methodology. I was able to read any instrument's next likely direction based solely on its price movements. I knew to the exact point where I was wrong, and this is very, very important, and it's an area in which I just want to spend a few extra seconds, so to speak. And that is that if you have any methodology, folk, any methodology whatsoever that you're basing your trading decisions on, that you must know that methodology has supposedly give you a buy or a sell signal. Therefore, that methodology should always be able to tell you not only when you are correct, because you're going to know that if you're correct, if it's moving for you, but also when you're wrong. And the ability to be able to know when you're wrong based on your methodology means that you can place protective stops exactly when you know, based on your methodology, that in this particular instance, it has not worked out. And that is very important because obviously trading is all based around risk. But first of all, you need a methodology before you can have and assess your risk. You need exactly to know when you are wrong. Now, I first began teaching others to trade in 1998. And the reason that I decided to do this was because I knew many aspiring traders, just as I had been, would find this methodology the answer to the same problems I originally had, which was making successful trading decisions. I had attended many seminars, I had read books, I was trying to self-teach, and I was coming away disappointed. But when I could see that the basics of price action, even the difference that had made to my trading over a very quick period of time, I knew that that would also be beneficial to others. And it was that led me in to teach others and become a mentor since 1998. So before we get into our methodology and show you how I go about my trading day, I think it's best to show you some actions, because let's face it, actions speak louder than words. Actions speak louder than words. And I just want to show you a couple of very recent trades. This is the DAX just taken this morning. And this is around the opening, and we had a sell signal here. Now this is showing our software, and again our methodology would be it's all based on each other. One goes hand in hand. But we had an intraday sell this morning on the DAX at 621, and as this screenshot was taken, just about, you can see just around 9 o'clock or just after, we were 35 points lower. Now, I know this was a small intraday chart, but for those of you that want to be short-term traders, there is that. For those of you that wish to be longer-term traders, here's the pound dollar using a 4-hour chart. And this again was taken as yesterday evening. Again, we had a buy signal here at 128.05. And that rallied and rallied and rallied. And you can see where the news item came out last night and with this very bearish bar. But at that stage, it was still at 134, whatever it was, 40 or whatever the case may be. So the original buy signal at 128 were now plus 600 pips. Another, the euro pound. Again, we had, the market had rallied, and again, based on a daily chart, we had a signal that came in at about 0.86. and it rallied to 93, but look at our 4-hour chart where the sell signal started to come in, 91, 97. Come back here just at the beginning of September, around the 3rd of September, was it? Yeah, and it's now 380 pips lower. So there's just a few charts to give you an example, and a few very recent charts, no more so recent than this morning, to just give you an example, to let you know that what I'm going to demonstrate to you now is very much worth its weight in gold, so to speak. Price action methodology. My price action methodology begins by being able to read basic price bars correctly, then by being able to read the unique pattern that occurs at every top and bottom and in every time frame, and then being able to read the trend based on the tops and the bottoms of this pattern. Now, all my price action analysis is done by reading the open, high, low, close bars, otherwise known as OHLC, and the demonstration as per the screenshot here is the left is the open, high, low, close chart, and to the right is the candlestick chart. Now, the reason you may ask me, why do you use the open, high, low, close chart? And very, very quickly, the reason is because we put more determination and more weight in the close than we do to the open. And the reason we do this is because the close, number one, is the most recent price. And number two, the open is the most unreliable price. So for example, if you're trading, say for example, we use the FTSE as an example, the opening price is at 8 a.m. this morning, the closing price is going to be at 4:30 p.m. this afternoon. So it's what the close is in relation to the high or the low gives us our price action basic signals, whereas the candlestick very much depends on where the close is in relation to the open. You either have got the filled in body when the close is lower than the open, but you have got the open body when the close is higher than the open. But this very often can still be the case, and the close could be below the mid-range of the bar. So what does the basics of price action consist of? The basics of price action consist of being able to analyze single vertical bars, dual vertical bars, inside vertical bars, outside vertical bars, double tops and bottoms, etc. Now, knowing how to read these setups correctly, and then knowing, most importantly, how to take action based on their setups is a very, very good basis from where to begin one's trading journey. So let us look at just how to analyze a single vertical bar. And then on our next slides, I will go and I will demonstrate how you can use this information into your trading. The single vertical bar, in this particular example, we can see that we have a high price, and this is just hypothetical, remember, of 200. We have a low price of 100, and we have a close of 180 and an open of 120. Now, you and I can all see that this close is very much closer to the high than it is to the low. And based on analyzing this, that would give me an indication that the next bar, so let's assume that this is a daily bar, the next bar we should break to the upside before we break to the downside. With this particular example, again, we can put it into probabilities. The range of the bar is the high price minus the low, so that's 200 minus 100 is 100, and the close is 180, so it's actually rallied from the low to the close of some 80 points, so that is giving us an indication that we have an 80% probability. So it's all down to probabilities. We've then an 80% probability that we're going to break to the upside next. Now, what is the advantage of knowing this? Well, let's just give an example of how you would use this in a real time market. Bullish bar. So let's assume the next bar, as per my arrow here, this bar here trades within this bullish bar. But we know, remember what we know that we've got an 80% probability, as per the previous example, that we're going to take this high out before we take the low out. So the objective then, as close as it gets to the low, Our objective is to buy where other people may be selling. Our objective is to buy, because then the lower it gets, our stop is going to be the difference from our entry point to the bottom of this bar. So once this market, and this example, would break this particular low by even 1 point, because remember, we have an 80% probability that it will break it to the upside rather than break it to the down. Of course, it does happen. Of course it does, but we're talking about probabilities, and therefore we're able to base our risk exactly on our probabilities of what we're doing. And we know exactly, as I said in one of our first slides, to the very point when we're wrong. So that bullish bar only fails, as the slide says, if it breaks the low first. In this example, it came back up and it broke the high. Now let's take a look at the weekly chart, what I mean of the FTSE. It's a recent example. And a very recent example was this particular bar here. Let's just look, a very bearish bar. In fact, it was an outside vertical bar, which means it had a higher high and a lower low. But the key thing here was that we had a probability, a very high probability, we were going to break the low before we would break the high up here. And the previous next week or two, this market traded within this outside vertical bar bearish range. So what was our objective? Our objective was to try and place a stop, or try and place a trade that was objective to take the low of this weekly bar out to the downside, with our stop being above the high of this particular bar. Because we knew that the probabilities of it breaking the low before breaking the high were much greater. We had like a 95% probability of these lows going to be broke. That gave us only a 5% probability that this high was going to be broke, firstly. And let me tell you, you can go and look at a weekly chart in the FTSE, and you can see that the FTSE broke the 729193 level first. So therefore, the objective on a smaller time frame was to try and pick an area where you've seen weakness, with the objective of the low being broken. Here's another example on the DAX chart. As per this bar here, a very bearish bar. There was a strong rally coming in the US at this particular time. The DAX was in bear mode. Bearish bar. Inside bar. The next bar was here. At this particular day, this bar went up to make these highs here. I can tell you that the Dow had rallied I think it was maybe the guts of 200 points. But the key thing was, we knew from price action perspective that until the high of this bar was broken to the upside, that this very much was in place. And therefore, any opportunity that we could see weakness in a smaller time frame, we were looking to use that as shorting opportunities. This market subsequently fell 300 points. A weekly chart. This is a live chart up to this very, very morning. I just took the snippet of this here again and I updated it. I updated it this morning. So you can see here, again, a bearish bar. The objective was for it to take the low out. And the highs up here were at about 12,388, I think. 2 bars trading inside it. Weekly chart. Selling it as close to this high as possible. A stop just a couple of points above it. That's when you know that you're wrong. The objective was for the market to fall. Did the market fall and take the low out? The market fell and took the lows out of this market and went. There was something like a 300 or 400 point trade. Then let's take a look at analysing a bullish bar just on its own. A close here, closer to the high than the low. The next week, our objective was to take the high out and not the low. Did it do that? It did. Last week with a bullish bar, the week before with a bullish bar. The objective last week was to take the high out of the previous week's bar. Did we do that? We did. And the last Friday when it closed bullish, our objective this week was to take the high out. Now, people have been talking about the market being overbought and going to come down. We're only looking at the basics of price action here. And you can see on each occasion, this first bar, when it closed at 12,091, that was our buy signal. We knew that if it didn't take that high out, our objective was to intraday buy it as close to these lows as possible, because the probabilities of taking the high out were much greater to the upside than it was taking any lows out. And as this morning, we were up plus 500 points, just actually over 500. You can see there, it was at 12,601 or 02, 12,091. So that's just by being able to analyze single vertical bars. Now, let me assure you, there's much more to trading than being able to analyze single vertical bars, but it is the foundation. It is a great foundation for the further analysis of our total price action methodology. One more chart here to look at: daily Dow Jones chart. I will try that again. The daily Dow Jones chart, again, just bullish bars the whole way up. Some time back there was an 800-point move in 12 to 13 days. Just being able to analyze the single vertical bar and being able to base your decisions on whether it be bullish or bearish bars. Now, putting the basics of price action together with what I call my vertical bar trading pattern, it's the secret pattern. Trading this is going to be your key, or anyone's key, to trading success. Now, this is how we get into new trends at the most opportune times, is by trading the vertical bar trading pattern. We all want to be trading with the trend, and it also lets us know when a trend has been exhausted. Now, we all know the saying, a trend is a trader's best friend. But the challenge always is to identify a new trend at its earliest stage, and then being able to follow that trend with as little risk as possible until its exhaustion. Now, a trending market is defined by higher highs and higher lows, higher highs and higher lows. Obviously, that would be a bullish market. A bearish market would be lower highs and lower lows, lower highs and lower lows. Trading the trend is not just as simple as drawing a trend line. And the reason that I say this is because if a new trend is only beginning, you don't know where to draw the trend line from or to. Trading the trend based on the price action of the vertical bar trading pattern lets you know at all times what direction the trend of that instrument is in. Now remember that. Trading the trend based on the vertical bar trading pattern lets you know at all times what direction the trend of that instrument is on. What is the vertical bar trading pattern, and why do I call it the secret pattern? It is probably known more commonly as swing highs and swing lows. I call it the vertical bar trading pattern highs and lows, VBTP. And the reason I do this is because I apologize, you can tell that it's a live webinar. I forgot to turn the phone off. The reason I do this is because we have a very disciplined set of rules that determines when a vertical bar trading pattern, top or bottom, has been formed. And what is key, we know at the time and not after the event. Anybody can look at a chart and you can look after the event and you can say, oh yes, there was a top, there was a swing high, there was a swing low, there was a swing high, there was a swing low. But being able to determine that particular confirmed high and low at the time enables you then to be able to trade with the trend. So let us look at some examples. Hey, what I have done is I have drawn in the highs, the confirmed highs and lows on this FTSE 100 weekly chart. Now you can see here you can see here that we made a vertical bar trading pattern high. We made a low. This low was a lower low than that low. If you make a lower low, the objective of trend trading is that the next retracement is going to be a lower high. Lower highs and lower lows determine a downtrend. In this particular instance, what did the market do? The FTSE went up, it broke up through the previous vertical bar trading pattern high, and it made a higher high. So it makes a higher high. It's changed trend. So it went from a downtrend here now to an uptrend. So therefore, if it's made a higher high, the next retracement, we're looking to make a higher low. Did it make a higher low? It made a higher low. A higher low would indicate a higher high if we're going to continue our uptrend. A higher high. It retraced. It made a higher low. Would you believe this low here was slightly higher than this low by a couple of points? It didn't break it. A higher low, higher high, higher low. That there is determining, just based on our vertical bar trading pattern, I've been able to draw in accurately, based on our defined set of rules, the highs and lows. You could, I could, any of us could go into that chart and be able to determine what kind of trend we're on. Not based on trend lines, based on price action, based on the price action of that chart. Here is one that just took place yesterday in our live trading room, or during our live trading room, and it concluded after the live room was over. Now, in this particular example, we have the software painting the bars. But anyway, the point of this slide is to show the vertical bar trading pattern, lower highs. And you can see we entered a trade, and as per the screenshot, that trade was actually up to $780 profit, trading the light crude oil market yesterday. Market went down, so that was a lower high than the previous high up here, a lower low. Objective was to go back up and make a lower high. Did it? Yes, that was a lower high than this high. Then lower high to continue the downtrend, a lower low. Did it do that? Yes. That meant we were in a downtrend. The next retracement, the objective to stay in the downtrend is to make a lower high. Did it make a lower high? It did indeed. And these are all drawn in, folk. You can notice in round here that there is not a, some people may say a swing low. This was not a confirmed low. This was the confirmed low. This is a confirmed high. You can see in here, other people might, if you're eagle-eyed, you might be able to say, well, there's a swing high there. Yes, it's not a vertical bar trading pattern confirmed high, and that is the difference. Then we made a lower high, a lower low, a lower high. You can see where my stop was. Why was my stop there? My stop in this particular trade, that was an open profit, was there because I knew that if this market is going to change trend, it will have to take out that high before it takes out that low. So therefore, I was able to place my stop just a couple of ticks above that. So my entry price was up over here, back there, sorry, as the chart moves along, and I knew that my stop was going to be there. So that at that stage, it was trading at about 50.17. So, and the stop was at 50.25. That's based on our vertical bar trading pattern. The Aussie Canadian dollar, our bars, vertical bar trading pattern. Let's start from the bottom left-hand corner here. We had a lower high than this high. If we were going to continue in the downtrend, we were going to make a lower low. What happened? We made a higher confirmed vertical bar trading pattern low. Once that confirmed higher low was in place based on my set of rules, then I knew that we had now changed trend. And the objective was going to be making, if it made a higher low, the objective was to make a higher high. This started the uptrend in this particular market. It rallied, made a higher high. The objective then was to make a higher low. Now you'll notice that we haven't this low keyed in. Why have I not this low keyed in? Because I was not able to confirm that this was a confirmed vertical bar trading pattern low. This was a confirmed vertical bar trading pattern low. This went up higher low than this low, higher high than this high. That means we're in an uptrend. What is our next retracement objective? To make a higher low. Did it make a higher low? Of course it made a higher low. Yes, it did. Higher high, higher low, higher high. Then what happened? You can see that was our last vertical bar trading pattern, higher low. We knew that if the market came down and broke through that low, it had changed trend. We wanted to be out of any long positions from way down here. At the very worst, in our last position we're holding, we wanted to be out of it now. The market went on lower. It made a lower vertical bar trading pattern low. The next objective was to make a lower high. It came back up and it made a lower high. And it's quite interesting. This lower high was at the previous vertical bar trading pattern low. And that there was support. So once, as you all know, or should know, rather, that when something that was holding a support is broken, then that becomes resistance. The market can back up to that, and especially when you've got confirmed support, which strengthens the position even more. It came back down and it went lower. But what was key here, it couldn't break these lows, so it couldn't continue the downtrend. So although this was a higher low than this low, it meant then that our objective then was to take this high out. If it had changed trend indications where that it was changing trend here, because it couldn't continue in the downtrend. What did it do? It went back up, broke through the previous high, made a higher high, higher low, and away it went. That is the power of the vertical bar trading pattern, highs and lows.
Ian?
Yes?
Quick question from Andrew. What do you do if the next bar up is up following an up bar, or down following a down bar?
I don't quite understand, Simon. Sorry. In what respect now?
What?
Analysing a single vertical bar or analysing the vertical bar trading pattern tops and bottoms?
Andrew, maybe you can expand on that. I believe it would just be a case of the vertical bar.
Single vertical bar.
Up vertical bar, and then there's another false by another up.
Right. What happens if you're analysing a single vertical bar, and let's assume that it's a daily bar, and today's bar is a bullish bar, and the next and today it goes up, but it closes down below the mean. Then therefore that is negated. Obviously you've went long. The market's achieved its price action objective of taking the next the high of the bullish bar out to the upside, but now it's come back down and it's closed below the mean. That would then revert. You have to always trade the recent bar based on where the close is to the high or low. I don't know whether that's answered his question, Simon, but that is what I assume he's asking based on analysing a single vertical bar.
If you let us know if that helps you.
And again, Simon, just to reiterate, as far as analysing single vertical bars, it's very much the foundation of price action, and it's so important because even if you're trading off small range charts, I would never ever take a short sell signal of a bullish bar. Okay, number one. But number two, if you're trading, obviously a 5-minute chart is not going to be as powerful as a 15-minute, a 15 not as powerful as a 60 not as powerful as a daily, as far as analysing a single vertical bar is concerned. That's all. That's some people say, oh, look at this 5-minute chart or 2-minute chart or 3-minute chart. It's broken that and it's done this. Yes, that's why there's more to trading price action than analysing a single vertical bar. But you always, or I always do, and all of our members it's very key to whatever instrument you're trading that you analyse the daily bar at least, and even the weekly bars, and seeing what the price action of that single bar is. And again, obviously, Simon, the next step, which we haven't time for as time's going on, but the next step would be analysing the dual vertical bars, because then that's you're comparing the buying and selling pressures over two vertical bars.
Okay, let's just stick with this. Sort of, Andrew's just come back. He says, no, what happens if you have a bullish vertical bar and then it carries on? Where is the entry?
The entry, if you get one bullish vertical bar, and you're assuming that let's just assume it's a daily chart, as per the shot on the weekly chart here on the will I bring it back here? As per the weekly shot here, Simon, on this particular bar. 4 weeks ago now, it was a bullish bar at 12:09 when it closed. That is your entry. Or you can wait to the next day and see, if you're going to look in a smaller time frame chart, can you actually get a lower risk entry? And you may get a lower risk entry, because there are times that, as this example here, there are times when a market will trade for a day or two or a period of time inside this bearish bar, before Brexit. So you've either two options. You could be aggressive in your trading, or you can be conservative. Being aggressive, you're taking the signal at the end, if it's a daily bar, at the end of that bullish bar. If you're being conservative, you're waiting until the next day and trying to place a trade looking at the shorter time frame charts to try and be perfect your timing a little bit and to reduce your risk. Does that help?
Great. Yes, I'm just going back. It says thanks. So the close and the low are key. Excuse me. Couple of questions. Peter and Steve both asking about the time frame. Does this work on a 1 hour chart? What sort of time frames does the strategy work on?
The strategy works on, if you're analyzing single vertical bars, you have to give more credence to the larger time frame charts, okay? But certainly if you're trading hourly bars and you've got a large range hourly bar, the objective would be obviously for the lows of that particular bar to be broken. Now again, if the question relates to the vertical bar trading pattern that I'm after demonstrating, Simon, it works in any time frame. But again, what's key here, everyone, is that never ever take a short signal on a bullish bar. Doesn't matter what time frame. Even trading like crude oil in a 4-range chart, I would never ever take, because it's probabilities. If you've got a bullish bar, doesn't always turn out, but if you've got a bullish bar, it means the probability of the next bar breaking to the upside is much greater than it breaking to the downside. So therefore, why would you want to be increasing your risk by taking a buy signal on a bearish bar or taking a short sell signal on a bullish bar? You wouldn't want to be doing that.
Okay, fantastic.
So just to continue here, just to finish off and show the methodology, etc., or the software. Over my many years trading using my price action methodology. Sorry, Simon, what I should have said. We'll try and cover any other questions towards the end, if that's okay.
Sure, thanks, Ian.
Yeah. Over my many years trading using my price action methodology, I often thought, was there something that I could add to my trading arsenal that would further complement my whole philosophy? Perhaps something that would make our setups easier to see or even confirm. And this led me to develop my Trend Trader software. And it first and foremost was developed for my own use, and again it is now offered to all our members of our trading family. And let me just, on this particular point, it very much relates to when I began teaching and becoming a mentor way back in 1998. The only reason that I done that at that particular time was because I could see the benefits that even the basics of price action had immediately made to my trading. And therefore I knew that those benefits would be also beneficial to others. And that's why I started out teaching other people to trade the markets. Now, the same thing exactly applies in relation to developing my Trend Trader software. I developed it, and once I could see that this was beneficial to me, I knew that it was going to be beneficial to others also. Now, trading the trend using price action and combining it with our software, this STB Trend Trader tool really does put the icing on the cake, because it does give you that little further confirmation. And you'll quickly see how this is going to really give you the trading edge. Now, it is a visual indicator. It's very simple. It doesn't clutter your charts in any way, shape, or form. It paints the price bars red, blue, or green for a sign of weakness, strength, and neutrality, respectively. And again, I know I'm going over old ground here. It was developed for my own use. It is a totally authentic indicator, and it is based on the sum total, because the question I get asked, so I'm covering it. It's based on the sum total of buying and selling pressures within that particular instrument. And what's very key here, folk, it works on all financial instruments and all time frames. What is quite bemusing to myself is the fact when you hear people coming up with saying we have a methodology that is for the FTSE, or one for trading oil, or one for trading something else, but it doesn't work on X, Y, Z. Beware if you hear and read or see those comments, because if you have something that is going to be beneficial to your trading, it should work across the wide spectrum of trading instruments that are available to trade. So let's look at some examples. This is just an example, a very real example. This is last night. This here is the 20th of September. Buy signal at 12,565 on the DAX. Buy signal came in of a higher low, blue bars. So at the time of our entry, we knew exactly where our stop was. We knew exactly. And the market rallied 70 points. Here's the New Zealand Japanese yen. The signal came in on an hour chart, 60-minute chart. Most recent buy signal, look where it came from, out of the reds into the greens, neutral. Selling pressure was over, into the buys, retraced. The most recent buy was at 81,269. Now plus 127 pips as yesterday or last night, late last night, when I was finishing off my presentation for the purposes of putting up the most recent charts. Pound Japanese yen, this is going back a few weeks ago, maybe this is the week that we had over our 4 or 5 currencies, trading at £5 per point, equated to £10,000 profit in 1 week, just using our software tool. The buy signal in here in the pound yen was at 141,302 plus 500 pips. I could show you charts for the next hour, folk. I just want to give you examples to show you the authenticity of the software. Pound dollar, buy at 126.87 plus 339 pips. There's the Dow, rallied over 300 points. Aussie Japanese yen plus 219 pips. Works in, as I say to you, on any instrument. Look where the Apple buy came in at 116.64. It was now trading at 155. Here's the very recent chart just of Visa. Buy signal in May of this year at $89. Closed last night, now trading at 104. Blue bars, higher highs, higher lows, the whole confirmed higher high, confirmed higher low, higher high. No, that's not a confirmed. It's actually went from that last high to here. It's probably due a retracement now, Visa. I just want to look at the last chart here. This is the US Canadian dollar, and it's a chart that I, for those of you that have seen my presentation before, you probably recognize this chart. But it's something I want to demonstrate. A chart without the software and a chart, exact same time frame with the software. There's the chart without the software, and yes, of course you can trade it based on a vertical bar trading pattern, highs and lows. That's what I've done for many, many years, until I was able to develop the software, which was only launched in June 2015. And here's the next chart, the exact same chart with the software on it, with the indicator on it. And you see the difference that it makes painting the bars blue, and then of course going green to the sideways action, going blue, and then of course you can see at the very latter here starting to go red. So just comparing those two charts, you can see the power of having the software on top of the methodology. So please remember what I've demonstrated today. Apologize. Phone can't stop. Bear with me 1 second. I thought I had my phone turned off, and I just have to apologize for the second time. I apologize so much. But please remember, what I've demonstrated today is not theory. It is proper professional. There's a proper professional practical methodology, and it's exactly what I do every day. You can apply the price action material you've seen today now, because the basics of price action are, let me tell you, so powerful. Now, I know that learning my price action methodology in depth and combining it with my unique trading tool will make you a profitable trader, but I am pleased to announce that you now have two choices. If you wish, if you wish That phone call's knocked me off, folks, so I apologise. If you wish to avail of the methodology in which we use, and you want to come on board, we have two choices. And you can, the first choice is learn my methodology yourself and become your very own discretionary trader using a totally professional methodology, or join my trading group on the Pelican app and take the easy route and follow my trades without having to learn anything. The full membership benefits, if you wish to do it on your own, get your own software, and you make your own trading decisions, trading your own instruments, is you will have full access to learning our complete methodology from beginning to end, the vertical bar trading pattern, money and risk management techniques, learn how to use multiple time frames to enhance your timing, and that is a skill, folk, that you will not learn overnight. And what I mean by that is that you're trading off multiple time frames to actually set up your trades, in such a way that you're minimizing your risk, but that you're trading in conjunction with what the bigger picture is doing. This is all done through videos on our members area on the website. We have a weekly live trading room, and then we have individual training webinars. This is also, you will have full access to our Trend Trader software, including all future updates free of charge. And we have a couple of updates coming out very shortly. One will be one that will be giving you notifications when a bar changes color, etc., which means you don't have to be glued to your screen. And another one will be where it will be picking out the vertical bar trading pattern highs and lows. Again, you will have one-to-one personal tuition and unlimited email support. Now, the one-to-one personal tuition is very, very important, I feel, because it doesn't matter how many videos you've up on a site, etc., whether you have 10 videos or whether you have 110 videos. It's such a difference when you have someone with whom you can speak to and you can go over charts together, etc. The total cost for the lifetime membership on our website is £1,497. It's a one-off cost. There's no recurring fees. And as I say, you will get all updates, the software feature updates, all included in that package. Now, there is a special discount today available for Round the Clock Trader, and the link below is beawinningtrader.com/product/STB-trend-indicator, a little bit long. Perhaps, Simon, you can maybe put that in the box if you wish. Or our second option is join my group on Pelican, which means that you have no learning to do whatsoever, and you simply copy my trades for a monthly cost of £97. But the first month there's a 50% discount, and again, if you use the code the B4W8T5, again, don't worry, you mightn't be able to write that down. You'll be able to email Simon and it'll be there for you. So if you do that, you've got both benefits. Now, just let me tell you that on my Pelican app over this last 3 weeks, we have equated into just over a 10% gain. This week has been up and down with a 30-point move this morning, which we locked in, and I don't know what the update is in the euro-dollar trade. Now, just to let you know, in relation to the Pelican app, I expect to initiate a minimum of two to three trades per week. Most of my initiated trades will be based on the 60 and 240-minute chart, so bear that in conjunction. It means that you have slightly larger stops. All right. The main instruments I will be taking trades on are the Dow, DAX, and the FTSE, and the Forex markets will be the pound-dollar, cable, euro-dollar, euro-pound, pound-Japanese yen, US dollar, Japanese yen, and there will be one or two others in there. It will not be, it is not something that's going to be, some days there will be more trades than others, and other days there might be no trades at all. But again, we've been up over 10% so far, and we haven't completed our first month on the Pelican app. And if I was able to do that regularly every month, it would be one very excellent result, as you all know, folk. So, Simon, that is me finished as far as the presentation goes. Any questions? Just keep firing them, please.
Ian, thank you for that. A few questions that have come in relating to the charts. First off, Bruce asks, do individual instruments have their own point size that could be called noise? for example, the NQ can oscillate 2 to 3 points as it heads in a trend?
Well, look, there is the difference between the buy and sell in every instrument you go. The Nasdaq, obviously, the NQ market will have its it will have obviously its difference also. But if you're in a trending move, 2 or 3 points is not going to make an awful lot of difference if that is the case. Now, I would trend the Nasdaq futures market myself periodically, and I would trade that off the NinjaTrader platform based again on our methodology and our software. Our software is available for NinjaTrader, TradeStation, and MT4. I have never found any problem because, again, if you're going to be trading in very short term time frames, it may have a little bit more of an effect on the longer one, but no, it'll not affect the overall position as far as the vertical bar trading pattern trend is concerned. No.
Okay, thank you. So Fitzroy, Robert, Peter, all sort of asking similar questions. Could you repeat the colors? Do the arrows appear immediately? The bar when the bar closes, and does the software give
something, Simon, that I probably didn't say is that the bars do color immediately, and there was a slide that I maybe missed out. It is a totally authentic indicator, everyone, and what I mean by this is that that it doesn't repaint the bars. So if you've got a red bar and indicating weakness, but that market does rally, that bar will remain red. In other words, if you go to look at it in an hour, or if you go to look at it in a half an hour, that bar will still be red, even if the markets went up or down. There's nothing as horrible, in my opinion, as you trading off a particular indicator or methodology, and all of a sudden it's giving you one signal, and the next thing it's giving you something different. Now, don't get me wrong, it doesn't mean to say that every time you get a blue bar the market's going to go up, or a red bar it's going to go down, but what it does do, it means that red bar will remain there, so it'll not repaint it. In other words, you'll not be able to go into your chart afterwards and say, oh goodness sake, I took a signal based on that red bar and all of a sudden now it's blue. Right, so where's the redness go? That will not be the case. If you go back in 12 months' time, it will be there. So, and it does paint the bars, to answer the question, Simon, at the close of the bar.
Fabulous, thank you. Okay, what about futures? Does Fitzroy asks, does the indicator work for on a futures platform?
On all instruments, Simon, on all instruments, and as per the chart, that there is the most volatile futures market you could trade, the light crude oil market, the most volatile commodity you could trade. And there is it yesterday in our live room, trading the software with the red bars on our vertical bar trading pattern, and that is real. So that just answers that question in actions rather than words.
Steve asks the million-dollar question, what's the overall win-loss ratio?
The win-loss ratio, it is, to be quite honest with you, I've never specified and written down the win-loss ratio as a rule. And the reason being is because we're all different in relation to the time frames we trade. So therefore, it's going to be different on a 5-minute chart compared to 15, 15 on a 60, and 60 on a daily. All I can say to you that if real time in the past, in the past, I have copies of checks of which I've taken from brokers, etc., and then no more so than recently over the last few weeks in Pelican, you can see some of our trades, not all of my trades, let me tell you, some of the trades in Pelican, you can see that we're up over 10% on the trades that I have selected to go into Pelican, because I mean, unfortunately, I be doing other things at times, and not every trade and not every instrument that I have a trade, I'm flashing over to Pelican. I'm trying to pick out, being selective rather than quantity, so quality rather than quantity. So that is basically it.
Yeah, in that's. Am I right in saying that you would expect in the room to be seeing maybe 3 to 4 trades a week? Is that the
I
sort of
would, yeah, Simon. I've put on the slides here a minimum of 2 to 3. I would honestly say it will be more than that, because there's been more than that this week. This week hasn't just been maybe the most the most straightforward trading week at this particular minute in time. But again, like, we got 30 pips this morning out of the pound yen trade. And again, I'm very aware that if people are following me, I'm being probably a little bit more risk aware than I would be if it's on my own account, etc., etc.
Okay, that's good. So you're looking for these trades, these patterns to get set up.
Yes, again, it's the longer time frame chart, Simon. Sorry for talking over you.
Okay, Christopher's saying he's a member, but he's lost his password. Can you get anyone? Christopher, I'll have someone from Pelican contact you about that. I'm presuming, is it related to the Pelican group, Christopher, or Ian's software? I mean, maybe this is something Fitzroy is asking. Could you actually just repeat the offers here, because you're available in 2 places, Ian. You have your own existing business and the membership group and the software that you can buy. And the software is a once only purchase, I believe, for the trend indicator software. But you also run a live trading room within the Pelican app. Yes. So there's 2 things. We should probably just be making that clear. There's 2 ways to be either following you in the live room, where you don't need to maybe do a lot of the legwork. You've already done that effectively, or to be able to sort of buy the software and do the work yourself. Is that a fair assessment?
That's correct. As I say, the Pelican group means you've no learning to do. You simply copy my trades, and obviously it's the trades that I'm doing. Which may be slightly different instruments than you might want to trade, but that is no learning. £97, and again, there's a 50% discount code for the first month. So in other words, the first month's only costing you £48.50. Or again, there's my software, which is for a full-time membership, lifetime membership, which is £14.97. There is a special discount available today for RTCT. That is a £500 discount, so it's $9.97 today for the rest of today, folk. After that, it's up to $14.97. So it's $9.97 if you wish to go that way and learn. That's what you get for the full membership benefits. So you have 2 choices, which we never had up until very recently. So we now have 2 choices.
Fantastic. And I know there's people already. The group is filling up in the Pelican live group. Is there a limit to the amount of people that you'll take in that group?
Well, obviously, with it being only reasonably new, Simon, to me, it's something that I haven't decided yet. But at this stage, I would have to honestly say no. But obviously, if it continued to grow, it would become, there would be a situation that yes, you would certainly be limiting the amount of members. Yeah.
Fantastic. Great. Marguerite says, marvellous presentation. Thanks. Thank you, Ian. And thank you very much. Christopher, as I said, he's got his password. I'll send you his details so you can maybe resend him his password. Tina says, does this work on higher time frames, i.e. the 1 and the 4 hour?
Oh, very, very much so. Again, if you let me go back to there's the 1 hour. If you go back to the very beginning of our presentation today, let me just show that. There's the 4 hour from the pound dollar, where buy signals with 128.05 right up until yesterday evening. There was the again up to yesterday evening, the 4 hour on the euro pound, 380 pips lower. So yes, it works. As I said, it works right across the whole spectrum. Right down to a 1 minute chart. I think in last week's presentation, Simon, I showed a 1 minute chart where we'd gathered 80 pips on the euro when it fell over the space of an hour or two. And again, trading the vertical bar trading pattern, the software, picked it up to perfection with 80 pips, I think, in last week's presentation. But yes, it does.
Fantastic. Well, it's all good news here. And I say I'm on your Pelican group as well. It's great seeing these signals coming through in the morning, sort of hitting the stops, and it's great. It just appears on the phone, which is great. Okay, Colin, how do we obtain the 997 on the website? Is it a coupon code? Colin, maybe
the 997 on the website will be. I will be putting it up now. Okay. Once I come off this, it will be available, and it'll be available for the rest of today. After that, it will be down again.
Okay. Or failing which, folks, if you just drop me an email, tell me what you're looking for, and I'll put you directly in touch with Ian, and we can sort that out. So any of these codes or anything, just failing which, drop me an email. I'm more than happy to redirect all that, so you can reply to any of the emails that you got from the GoToWebinar or the emails that I send you from time to time about the webinars. One last couple of questions. If you take the lifetime, does that include the Pelican group, or is it separate? Asks Sanj. It is, Ian, I believe they're separate entities.
They are separate as we speak. Yes, they are indeed. Yes.
Okay. And is the purchase only for one platform?
No, the software is available for 3 platforms: MT4, TradeStation, and NinjaTrader. But again, let me assure you, I'm pretty flexible. I don't want to say totally open flexible, because that's when you get abuse. You'd be abused, Simon. I don't mean that. But what I mean is that if I had a member and they had moved from NinjaTrader or had moved from MT4 now to a different platform, would they have to repurchase the software? Absolutely not. Okay. And I think anybody, and I'm not saying too many people know me, but Simon knows me, that is not the case. No, I'm not that ruthless, let me assure you. Okay.
Fantastic. Okay, so beawinningtrader.com. What I'll do is once we go on to our next presentation, which ironically is with Peter Watson and the founders Peter Reid of Pelican, where the group is. Once we get into that, I will follow up on the message board with the URL link that people are asking for. Now Sam's just asking for these links, but we are just past midday, so we'll say thank you, Ian Foster from beawinningtrader.com. Ian, it's been great to have you come along again. Thank you for talking us through the system, the indicator, letting us know about the software, and we will keep in touch. But in the meantime, I'm going to take the controls back from you so we can move along. So
it's a pleasure. Thank you very much, Simon, and thank you all. And again, as I say, any questions, just email Simon, and I'll get back to you.